Good afternoon. Welcome to Options Tender. It is Wednesday after the bell, right before CPI numbers. That's been the talk of the town. The dollar's been the talk of the town. This rip your face off rally has been talk of the town. We're going to go through all of those and see if we can decipher what's going to happen next. And what I'm going to tell you is I'm going to be honest with you. I am completely bearish. But the fact is the market can do what it wants. With CPI numbers being a catalyst tomorrow, it can rip to the upside like last time and completely fade during the real-time hours. It's, anything's on the board, but I'll try to describe the best I can on some scenarios. And if you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. Don't forget that those like buttons, all that jits and jazz. And I love that one of our viewers here just commented and said for the algorithms. I really, really appreciate that. That's so fun, and I appreciate you doing that. You know the deal. So here we go. ES on multiple time frames, and then we'll go to VIX, dollar. We'll just kind of scroll around a little bit more if we think of something else that stands out. But let's start off with ES as usual. I'll close this board up so we can see a little bit better. On the monthly time frame, we're just testing that 8 EMA. There's nothing new here. We're still bearish. We need to get over that convincingly and hold it. Okay, that is that. Nothing more to say on there. We're going to go down to the weekly time frame. On that weekly time frame, just like say over and over, we just, we broke down from the ascending triangle, lower highs, lower lows. We're in a bear trend, but you see the bottom of this channel coinciding with the 200-week moving average. We are oscillating right in between there, getting real tight, coiled like a spring. Now, the spring has not sprung, okay? This is nothing. This move is nothing here. I'm expecting maybe a quick wick test just like this one, the last CPI, quick wick test on either direction, let's call it either direction, and then the actual move should continue. So we're in a position where I'm pretty heavy in puts, but I have call protection, and you just have to be patient. When the move happens tomorrow or the next day and following through, just let it ride. Don't worry about taking off those call protection, things like that, and take out puts too early. And now if you're just swimming in profits at some time, you just take it. That's not the point, but just know that things are gonna get wicked. So this has been an area of interest for a long time, and we're getting near the apex of this triangle. We're near the top here, but all this says is it's a setup for a 1-2 for me. I've been looking at this as a 1-2 setup for a long time. This was a large 1-2, 1-2, and 1-2. That's about as bearish as you can get. Now, there are other counts that just says we have one more move down, but the count I'm looking forward to, if we get the reversal, and it has to be pretty much immediate. It has to be tomorrow, the next day, sometime this week leading into next week, that reversal, we're looking down here towards the 3,500 all the way down to the 3,200. So that's our targets. We start breaking and holding convincingly and closing above the downtrend line, then we have a whole new ball game. We're going to get bullish as can be. So I'm ready for it. My mind is set, and hope you are too. Okay, let's move to the daily. All right, daily trend is our friend. Zoom in here a little bit. What is happening? Oh, Hey, 200-day moving average. That's simply a little devil. We made it back to it. That's been our stomping grounds. That's where bear markets are made. So the 200-day is still on a downtrend. We're back testing it. Will we hold it? Will we get above and hold? That is the question. You have a lot of confluence up here. Again, I'll just relate back to the CPI before opening hours. We were way up by 4,200, and by the end of the day, I mean, that over 100 point fade from the top. So, and I'm pretty sure it was actually higher during the no, this is future. So yeah, we're right here about 4,200. Anyway, so we had our consolidation area with the holiday trade here. We're holding that 8 EMA. We finally popped the 50, and we had some continuation on today. I got to tell you, I wasn't expecting that sort of grind. It almost like started off as a slow grind and started picking up momentum, but that's fine. It's not a big deal. So we're on this. I'll show you the Elliott wave as well. Let's go down to the 65 minute. Again, this is just a testing this 200. We can pop past it, or we can just drop from here. It doesn't. The market is not concerned about that, but it's something we're looking out for. Okay, 65 minutes. Let's switch over this board here. Okay, now this paints a different picture. Okay, we have a bear flag. Sure, it's a little bit over. You can adjust. Let's just leave it right there. We're peeking out of it. It's all good. We broke out of the weekly last week's range and popped out, dipped, and then just drove straight up to finish there. But so this is a bear flag in my eyes. I do have the triangle that's still there. It's a triangle breakout as well. It just depends on how you're looking at it as a bull or bear. And this was an impulsive move to the downside, and we're just looking for the retracement. Now, if I consider this a wave 2, which I do, let's go ahead and go to the Elliott wave board. If this is a wave 2, it's typical to have zigzags or a double zigzag, and I think that's what we have here. After a 5-wave move down for wave 1, we had an A, B, C for a W, and then this triangle. I don't have it fully labeled. For an X, for the B, or typical B wave, so it'd be A, B, C for W, 3-wave move for X, and then again A, B, C for a Y. So when we thought we were done here, we thought we had a zigzag right there. We thought we were finished during the holiday trade, and it just kept going and going, chopping us up. And then we finally had a big move out of there for another impulsive wave, a 3-wave move down, an impulsive wave move up right into the 50-60% zone. Once again, like I said, I'll be the first to admit, I thought that we were finished with our move here, and that wasn't the case. We couldn't break down from levels, so we started moving to the upside, but we're right in that typical wave 2 retracement zone. Sure, you can, you can move up more to the 40-30. Maybe we pop up there in the morning, but anything above that, and you got to start getting weary, and the downtrend line is right above there as well. But this is a huge spike. Technically, a wave 2 is not negated until after you get a penny over this spike here. So I'm not gonna play it much more over the 62. We're gonna play the downtrend line and regular technicals as well. But we have a clear zigzag, 3-wave zigzag for a double zigzag here. And if you want to, I think SPY shows a little bit better. It's a little bit different count. but it gives us a little bit better point of view. Kind of confirm. Again, you have the bear flag there, but let's go to the Elliott Wave board. And this is just our short-term count here. And we have our 1, 2, 3, 4, 5 wave move down. And then you see this 1, 2, 3, 4, 5 leading diagonal, a B wave down here. And then 1, 2, 3, nice 3 wave move. Excuse me, a wave 3 move, wave 4, and an impulsive 1, 2, 3, 4, 5 wave move to the upside. So this is very clear, crystal clear. And I just want to point that out. The ES is a little bit more choppy looking. It's a double zigzag. You know, looks sloppy, but this is as clear as it gets. So that's our count. I have a lot of confidence in this count, but you know, like I said, the market is going to go do some wacky things in the morning at 8:30, and we'll see. Hey, maybe we come in line with CPI, and it's a no mover. You know, it gets all those strangles that are out there, all the straddles and strangles. It just kind of whacks those, and you have to reposition yourself. But that's what happened when Powell was speaking the other day. He did not make the market really accelerate. So enough jabbering on. Let's go ahead and look at, how about VX? All right, this is the VIX futures. I just wanted to take a look at this one. We had our falling wedge, broke off from it, right back at support here, and now we're actually kind of perking up a little bit after what I think, and I'll show you on this board, it might be a little easier. After coming down here, you had this low, and then you see the 1, 2, 3, 4, 5 wave move up. It's an impulsive move. And now we have a double zigzag here. Zigzag and a zigzag to give us a correction down to the 88% retracement. And we're holding at the bottom of the channel, perked up, ready for tomorrow. This will be a good sign. If we break down from this channel, then most likely the market is heading upward. We'll check out Dixie. Check out the dollar. All right, dollar, my friend. Let's go ahead and go to the daily. It shows a little bit better. All right. Once again, we've shown this a couple videos in a row. We had this move down here, corrective move, to where we came right into the mid channel line. Also support, also positive divergence from a falling wedge. I mean, just saying, it's a clue. It's a clue that tomorrow the dollar might at least pop for its next move. We don't know if it's going to get new highs or not. If it's getting new highs, then we're probably getting down and dirty, getting crazy in the market. Anything else we want to take a look at? We can go RTY. Yeah, it's a messy board there. All right, so we're definitely popping above the downtrend line. You can call that a breakout if you like, but you know, we did this earlier as well up in this area. So respecting it, I could pull it out a little bit further, but I'm just going to leave it here. This is a wild beast, so I'm not worried about this making fake breaks and all that sort of things. I don't rely on IWM or RTY in order to make decisions. NQ. Let's go to the trend is my friend. All right. So we had that point of view of the channel. We bounced off of it. We rejected, but actually broke through. And now we're breaking through this area as well. So that coincides with the 50-day moving average, which is sideways. Let's see what happens. You have a little bit of resistance, not a little bit, a lot of bit of resistance. This is a head and shoulders. Look to it, or I'm sorry, expanding triangle. Look to it. This is a breakdown area right here to 11,500, and it looks like it's going to back test that area. And it's as simple as that. I have to treat it just like that. It's just a back test. You break down, you back test. It happens over and over in the market until convincingly getting above this 11.5 and staying above. Then we can start really getting bullish and at least productive to head up to some higher ranges, and we'll have to figure out a different Elliott wave count. But we're almost to the 50% retracement on this one as well from this high. So we're still right in between that 38 and the 50%. And that might do it here today. We had Netflix just doing its thing. Really hasn't changed, but the market was so bullish that just kind of carries everything with it. So we're in a 1-2 setup right now. We had an impulsive wave down, but held the trend line, and a wave 2 possible. So if we break that trend line, then we'll be looking for lower prices. We held on to our lotto for tomorrow expiration at 215, 215 put. We'll see if that works out for us or not. It's that's a ride or die one right there. So also any others? I guess Apple. We'll just check that out real quick. See what we're doing here in this Apple chart. All I want to know is if we made this next high. So we had a finishing and ending diagonal right here, and this was a 3-way move up for an A, and then a B, and now a 1, 2, 3, 4, and I believe we eked out a slight high. We have 133.51 and 133.41. So we eked out a high. There's a gap up here. Also, the options expected move if we want to move up any higher. And just keep in mind, there is a bullish count for all of these. So if you're a bull, you still want to see a pullback, but you would say this was the end of your move. This is the low, and then you have an impulsive 1, 2, 3, 4, 5 wave move up, and you're looking for a wave 2 after this before heading higher. So either way, if you're looking at the market, you want to look at this to where you had your move. Let me go to a different board. Okay, so you have sort of that bear flag action here. You had your 5-wave move down, and even if you're a bull, we're thinking about, hey, this is a correction, and we want to I believe I said a leading diagonal for 1, 2, 3, 4, 5 is a bullish way to look at it. So this would be a wave 1, but you still need a wave 2 correction. So tomorrow, I think it just favors that the bears are at least going to get a pullback, and we'll be looking for some sort of 50-60% pullback for wave 2 if it really stops there. And then we'll take off some profit and see where it goes. Do we continue down or do we start heading to the upside? So there's always a scenario for the bulls and the bears. I know that I focus on the bears, but that's because our thesis is the bear thesis, and we've been right for months and months and months and months. And sometimes you're a little bit wrong on the short term, but we put it right back into action. And this one came right actually to the 618 retracement from the top. So if you want to see my long-term bearish count, I put these on my Patreon every single day. I update them all the time. This is my big bad bear count. You have your big old 1, 2, lower degree 1, 2, and it's all meshed up here, but then a 1, 2. That's a beautiful setup. Gorgeous 1-2 setup there. And then if this is a 1-2, then we expect a wave 3 down here, possibly to 3,400. Back test that that low point here at 35 and down to the 3200 area, and we'll see what happens there, because that could be an end of a wave C technically, so we'd have to be very careful around that area. But there it goes, you guys. There's that big bear move, and honestly it just continues down. If we are truly going to be in a bear market, you see that wave A, or 1, 2, all the way down here for 2400 area to 2250 area for wave 3. If it's a C, it's over. Wave 3, then we'll probably move sideways for a long time before washing out to a wave 5. Okay, that's what I got for you. There's the big picture, the little picture. Tomorrow is just another catalyst for a rodeo ride. We'll see what happens. And don't forget to hit the notification, because I do these videos almost every single day. And if you have any chart requests or anything like that, just let me know. Just put it in the comment. All right, thanks for joining us here at Options Center. Have a wonderful day.